Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ken Shreve here with a breakdown of the action in today's session, where we did see a pullback after that positive reaction to Fed Chair Powell's speech or interview yesterday. But Ken, where do we stand today?
Yeah, fairly orderly pullbacks. Still seeing the indexes holding above short-term support levels, so we'll take it. But have three stocks to look at. First of all, Inspire Medical (INSP). Another good earnings report with big revenue growth. This company is in major expansion mode. Next up, we'll talk about Wingstop, which has earnings in a couple of weeks. Tough day for the restaurant group, but Wingstop is forming a good base here. And finally, Floor and Decor. Big breakout last week, but the stock is just not budging so far this week, trading really tightly like that price action FND.
Okay, we'll take a look at those stocks, but first let's analyze the major indexes today. Starting off with a look at the S&P 500, down at 1.1%. As you said, Ken, a fairly orderly pullback here with support right around that 10-day line. The NASDAQ, the hardest hit today, down 1.7%. The Russell 2000 behind that, down 1.4%, and the Dow was off by 0.6% today. So here, starting with the S&P, I mean, if we connect the dots along the recent lows, we're still holding at a pretty decent clip here on the ascension rate, I guess you could say.
Yeah, exactly. And like you can see, still holding above that 10-day moving average. S&P 500, a strong run, just like the Nasdaq, off lows. But you're seeing this continuing trend of higher volume gains followed up by lower volume declines. So volume just kind of trailed off as the session wore on today, and still ended with fairly sizable percentage declines, but lower volume softened the blow. So we're just really having a hard time seeing these indexes show distribution days, because when you go into a confirmed uptrend, you always want to monitor institutional selling in the market, and really just have not seen much of it at all. And that's made for a pretty good market trend flowing positive here.
Mm-hmm. Yeah, I mean, we've talked about how pullbacks that are orderly are healthy and expected at this stage. And taking a look at a weekly chart, there's a lot of dots that we can connect just above that 4,100 area, going all the way back to February of 2022. So to see a pause at these levels makes a lot of sense.
Does make a lot of sense, and still like the technical look here of the S&P 500. Even if we were to close lower this week, and maybe even lower again the following week, I mean, this would just be a nice little shakeout of some sellers, and could pave the way for more gains here. So I think market technicians overall are looking at the recent action as positive, seeing generally good action in individual stocks, and we're still in a confirmed uptrend with very little signs of institutional selling in this market.
That we are. We can also take a look at the NASDAQ on a weekly chart. Some resistance right at 12,000, which is also to be expected. Ken, your thoughts on where we're seeing the NASDAQ pause, which has been even stronger in this recent rally?
Yeah, so you have five up weeks in a row. So let's hope for a down week this week. And again, just a kind of a low volume pause here would be just what the doctor ordered for the bulls. If we start to see violent sell-offs where volume rises sharply from the prior session, that did not happen today. Again, we had volume lower than Tuesday. But if we start to see increasing distribution, that could cause problems for the rally. Not seeing it yet.
Right.
And Nasdaq still looks fine up here as it consolidates. Starts to consolidate a pretty big move from that 10,207 low.
Exactly. I mean, we could see the NASDAQ coming down to 11,500 or so. That would be right around the 21-day, right around the 200-day. We just hope it doesn't do that all in one day.
That's right.
Again, orderly would be the key.
Yeah, orderly would be the key, and again, it's good that you highlight those support levels. That 21-day line is, pretty close to that 11,571 pivot there. So, a pullback would not be totally out of the ordinary to that 21-day line. But again, the more higher volume gains, lower volume declines we can see, that has to make the bulls feel good.
Yeah, and one of the complaints, maybe complaint isn't the exact right word, but one of the things that we were saying as this rally continued to strengthen is that, hey, well, now all those leading stocks are extended. If we can continue to see an orderly pullback or some sort of pause or digestion here, that would hopefully help us get new proper entries for a lot of those leading stocks that may need to take a breath and that we want to get in, just want to get in at the right spot.
Yeah, there are a lot of extended stocks at this point, and that's not surprising when you look at how much the Nasdaq has rallied basically since early January. So market pullbacks allow leading stocks to pull back, and yeah, you're exactly right. It can give you rather than chasing these top performers, let them pull back down, maybe to the 21-day moving average or something like that, and just get a lower entry.
Well, we'll be waiting and watching for that to happen. Just a quick look at the Dow and Russell 2000 before we move on. The Dow, the least hard hit today, but it's been the most range bound here, not off to as great of a start as the NASDAQ and S&P 500 and even the Russell 2000, although it's not breaking down, so that's good. And we still have the Russell 2000 holding above its highs from late last year as well, right around the 10-day line. And let's look at the 10-year Treasury yield. It did end up reversing a bit lower today. So as of right now, maybe some resistance around this trend line, Ken.
Yeah, the market's not going to want to see this 10-year yield. You can see 3 up days in a row, and that pause, it finally closed a little bit lower today. But this narrative of rising bond yields, I don't think the market's going to want to see a big jump and see this yield continue higher. So pulled back a little bit today, and again, this 10-year yield is moving just on the market expectations of what the Fed is going to do. Probably still some concerns out there that inflation is going to be sticky, and once that Fed funds rate gets up to 5.25%, it could be several months before the Fed decides to pivot and lower rates. So the market is still grappling with that. How long is this the terminal rate going to be between 5 and 5.25%? So we'll keep watching that 10-year yield. But if we see those yields rise, it just kind of tells you that maybe there will be an extra quarter point hike, and we'll monitor it. But things still look fine.
All right, and now let's take a look at those 3 stocks to watch. First, with INSP, this is Inspire Medical, a breakout stock that we covered on IBD Live this morning. Let's see how it closed today. I'd say fairly well, Ken, up over 7%, some strong volume and really strong numbers here from Inspire Medical. It almost broke out ahead of earnings, but pulled back and found support just before the report. So what do you think about this breakout today?
Yeah, I mean, it closed in the top half of its range. It's pretty impressive on a day where you see the Nasdaq down what was it, 1.5% or whatever it was. So this stock, you can see the intraday chart here, basically just handled the gap up pretty well. Just kind of pulled back to the 265 level, which is above the 262 pivot. So I think the stock it was a perfectly fine day. Lots of volume, really good growth story going on at Inspire. They turned their first ever adjusted profit, which was a surprise, and the revenue growth has just been so impressive, 76% this time around. This company's business is basically they've built a better mousetrap, so people with sleep apnea, and instead of wearing all this clunky headgear that a lot of people have to wear, this is an implantable device that really does a good job, and they plan on building something like 50 to 55 implant centers per quarter over the next 4 quarters. So they're just really expanding because of this technology. So it's got the revenue growth, and the fund sponsorship is really outstanding here.
Great. Yeah, we can check that out on the right-hand panel here in MarketSmith. So we do have 1, 2, 3, 4, 5 IBD mutual fund index names in this stock. A big outside reversal week taking shape to the upside, and it looks like it's getting pretty close to the new closing highs, just a touch away from where it was in late 2021. So it seems like that's sort of the next level of resistance to the upside here, Ken.
Yeah, I mean, this is a stock that has a lot of Ken Slim traits. It's not profitable, but it does have the revenue. It does have the fund sponsorship, and this is really the weekly chart is a good example of what really a picture perfect flat base should look like. Sometimes you get flat bases that there's just kind of volatile swings. I mean, this is kind of nice tight action near the 10-week moving average. Good breakout today, so solid mover today, and lots of interesting things going on at Inspire in terms of their expansion.
It's quite inspiring, isn't it,
Quite
Ken?
inspiring. Yes, it is.
Okay, let's take a look at Wingstop, which is setting up again. This had a breakout during its last quarterly report, but didn't gain a whole lot of momentum from that level, Ken. It went on to form a base, did unfortunately undercut its 50-day line to fill in the gap, but was able to find support just under the 130 area. It's regained its footing and now has an orderly pullback here with earnings due again in 2 weeks.
Yeah, and Wingstop has a healthier market when it broke out and then kind of stopped at 170.87 and started pulling back. It really was trying to move in a market that was in tough shape. Now we're in a confirmed uptrend. Wingstop has rallied back above its key moving averages, and now you're seeing just a nice low volume pullback. You can see volume was very light today. Restaurant Group was under a lot of pressure. It was down 2.5-3% today at last check, and Wingstop fell a little more than that, but volume really dried up. This is exactly how a handle is supposed to form here. So we'll see if we can add a handle to the chart, and if this market stays healthy, this would call this a breakout candidate for sure.
So you're saying with improving market conditions, this one might be finally able to spread its wings?
Exactly. Took the words right out of my mouth.
Don't worry, we have one more to have the cheesy one-liner with, and that's with the floor and decor today. F&D recently broke out of a cup with handle. It's been trading nice and tight right around this 100 level, a little over 2 weeks to earnings. Looks like it's had a pretty solid volume profile, Ken, and looking at the weekly chart, again, that round number at 100 does appear to be a pretty notable level of resistance for us to watch. It's found a floor, but has it found a ceiling?
Yes, that's the big question. But like the accumulation distribution rating of A here, and we go back to the daily chart, you can see when the stock really started to move last week. Look at what it's done over the past 4 days. It has rallied off lows and closed near highs. The past, including today, the past 3 or 4 trading sessions, just nice moves off lows. Really tight today, just under the 100 level. Down 1.8%, but volume very light. So this is an example of how a stock can break out, and it's not that long before it can give you an alternate entry. So really just looking to see if Floor and Decor can kind of drift below the 100 level for a little while longer, and maybe it'll make a fresh run at that 100 level and fully break out. Really a good retailer with good return on equity and pretty good fundamentals here too.
Great. All right. Well, that is it for today. Thanks so much, Ken. And thanks everyone for tuning in. We'll be back with more tomorrow morning on IBD Live. And we hope you join us, investors.com/IBD Live, on all those details. We will see you there, and we'll see you right back here tomorrow after the close.